Hey, Sovereign Wealth Builders, Simon Dixon here, and welcome to another episode of Simon Dixon Hard Talk Live. Today, the episode's going to be on the battle for Bitcoin. And as always, we're going to be doing this in two parts. In part one, I'm going to be answering the question that I got a lot on X and a lot in YouTube comments and a lot across the Simon Dixon free membership portal on where I stand on BIP-110. The battle for the Bitcoin that nobody really wants to speak about or name it. And I want to name it, and I want to make sure that I've got some clear guidance on what I'm doing with regards to BIP-110. And for those of you that don't know, BIP is called a Bitcoin improvement proposal. And because Bitcoin is an open source project, anybody is allowed to propose an improvement to Bitcoin. And then there is a process in this open source project for getting code implemented and updates done. And at the moment, we are aggressively in our, I'd say, second block war debate. In fact, if you want to be accurate, it's probably our fourth or fifth if you include Bitcoin XT and Bitcoin Classic. And then we had what ended in the 2017 block war debate. And now we've come around with the spam topic. So I'm just going to be giving you a bit in part one on what I'm doing and where you can get resources to study further so that you can decide how this impacts you and why it's important. And then in part two, the title of the New Era Finance interview that I did was titled New World Order wants to steal your Bitcoin. So New World Order wants to steal your Bitcoin. And this is New Era Finance with Michael van der Pope. And we did an interview where we were going through all these points. Now, a few updates, because it has actually been a crazy week. Now, as I said, I'm in book writing mode on my book Lockdown at the moment. And I'm writing 21 chapters and I'm on chapter 18. Chapter 19 is actually where I cover the infiltration attempts around sovereign assets. One of those is Bitcoin. I'm probably, and I'd love to hear your feedback on this. I'm going to be doing as my next book, a follow-up, which is dedicated to Bitcoin and the entire history from my perspective from 2011. And the infiltration attempts and various things that I've seen over the years. I'll probably develop that into a book on its own while we're in this mode. But I'm on chapter 18 and chapter 19 is when I'm going to be doing this. So as part of the research, I actually had this headspace and time to really dig deep into BIP-110 and formulate, what I'm going to be doing. And so while I was writing that, I thought, let me publicly release a blog on exactly where I stand on BIP-110, what I think it is, what I think you need to be aware of. And I'll go through different things in this episode as a brief overview. But this week, leading up to that, I noticed that there was a flurry of events which, when you follow the money, are interrelated and connected. One of the things we had was an announcement from Adam Back's Bitcoin Treasury Company, which I've been a big critic of over the years, because the more parts of the ecosystem that are wrapped in Wall Street, the more the financial industrial complex gets to chip away at getting as much control as it can over Bitcoin. And one of the tactics that Cantor Fitzgerald has been using is to create tax efficient structures to incentivize people to wrap their Bitcoin in a Wall Street treasury company and then acquire or reverse merge their companies into a SPAC, a special purpose acquisition company. And Cantor Fitzgerald, which is now run by the son of Howard Lutnick, has been somebody that I've been covering over the years at Simon Dixon Hard Talk Live and giving lots of warning against. Well, we saw that BSTR, Adam Back's Bitcoin treasury company, was delayed. and it was delayed after there was a lot of controversy, released around various team members, and maybe it's just financing, whatever it may be. But right now, BSTR, which was due to go live as which would have been the second largest Bitcoin treasury company, has been cancelled or postponed, or whatever the politically correct way of stating that for now it's not going ahead. The other one that happened this week is Jack Mallers, who we've been covering over the years in terms of the reverse merger of Strike into a Bitcoin treasury company supported by Tether and SoftBank, who sold their position to Tether, and of course reverse merged via Cantor Fitzgerald and Howard Lutnick as well, 21 Capital. Jack Mallers stepped down as the CEO. Now that's got a couple of things. So firstly, if you're a Simon Dixon Hard Talk listener, you would know to stay away from these treasury companies. And so if you didn't follow that and you were a shareholder, then I'm sorry for your loss. Jack leaving and stepping down impacted the share price. But at the same time, that I was very publicly in a bit of a public back and forth with Jack Mallers around what it means to be a Bitcoin treasury company with Cantor Fitzgerald and the implications on turning into a financial industrial complex FIC node. Well, we got the announcement that he's leaving and has stepped down. And so it goes to show, I'm not sure exactly why or what it means. I'm not going to read too much into it. But it goes to show that there are things happening behind the scenes that Jack Mallers can't exactly say right now. But he's escaped the Cantor Fitzgerald FIC node and allegedly, according to his public statements, forfeited his options and various other parts. So I'm not going to talk more than what is known on the public record, but it's important to say that, these Bitcoin treasury companies and these CEOs, they're not going to get strike, potentially. We'll see what happens there. But a bit of interesting news on that. Also on strategy. So apparently strategy is now a dollar maxi. And on Monday, they announced, where they used to announce how much Bitcoin they're buying, they announced how much dollars they bought. And so now they're, cartelling to the FIC, to the STRC holders and the preference debt holders, and lightening down on Bitcoin in order to buy more dollars, to have more runway to meet dividends. And given that the convertible debt and preference shares haven't converted because they relied upon Bitcoin being in a bull market, and right now we're into a bear market. So MSTR is now a dollar maxi, announcing every Monday how much dollars they're buying. And I told you, this is what happens when you wrap yourself in a FIC vehicle, because my strategy is a Wall Street financial industrial complex wrapper. And I've been covering over the weeks and over the months and over the years around these different vehicles and creating mechanisms for manipulating the short-term price of Bitcoin in combination with other nodes on the network like BlackRock and Jane Street and Cantor Fitzgerald. And when you combine these all together with Bitcoin-backed loans via Jack Mallers wrapped into a company, like a public company, you get this big Bitcoin industrial complex of fake Bitcoin in paper versions of Bitcoin in order to centralize more control into FIC and get as much Bitcoin wrapped around those wrappers as possible. And so, Saylor has basically, or strategy, I should say, has now come up with a bunch of new methodologies and terminologies of digital credit, digital this, digital that, digital. Now there's a bunch of new ways of explaining that, oh, damn, the premium to the net asset value of Bitcoin no longer exists. And so therefore we need to come up with some new matrix in order to explain why we're diluting shareholders when our company is currently trading at a discount to the Bitcoin held on treasury. And so lo and behold, there was a call, and there was a bunch more terminologies just to explain how you can get away with dilution. Just like the Fed, when the Fed needs to print more money and dilute more, they come up with some new definitions of inflation. They change it to measuring something else. And so Saylor and Strategy are now following that. Redefine the terminology to explain why we're diluting shareholders that are meant to be paying a premium. They need you. Strategy needs you to pay a premium on top of the Bitcoin value for owning a Wall Street wrapper with counterparty risk that's designed to centralize as much Bitcoin as possible for the FIC and the financial industrial complex. And so at the same time, Michael Saylor decided to come out and share his stance on BIP-110. And we got more and more people that were sharing that as well. And so what I wanted to do is also share mine. And I wanted to do it properly. And so I've been working on this blog, and we're going to be publishing this blog. The link will be included in the description below. And I want to answer a few things. But first, philosophically, I agree with BIP-110. I've been very sharing with you that I've been running knots as a node, and I think that competing implementations are very important. I do believe that there is corruption and infiltration attempts within core. But when we're going into soft fork and hard fork dynamics, it kind of sets up a different game. And that game, I'd like to share a little bit of my experience because I went through the last one. And I went through the early ones, and I remember the very early attempts, Bitcoin, XT and Bitcoin Classic. And at each time there was like a leading character, whether it be Mike Hearn or whether it be Gavin Andresen. And in each phase, we had a capitulation where they leave the community and they end up, being involved in a different version of Bitcoin. In the case of Mike Hearn, he actually joined the banksters coin R3 to create central bank digital currencies. In the case of Gavin Andresen, he publicly shared how he thought Craig Wright was Satoshi Nakamoto based upon allegedly Craig Wright scamming him in terms of a demonstration with a laptop, and then ended up down the Bitcoin Cash route. And then we had Bitcoin SV as the Bitcoin Cash split off. And each time you get these further forks. There's soft forks and there's hard forks. Now, in 2017, it really came down to, there were a few Bitcoin venture capitalists. One of them was the one that I was running, Bitcoin Capital through Bank to the Future. And we ended up investing in lots of companies. But there was also a couple of other Bitcoin venture capitalists early at the time. One was Brock Pierce from Blockchain Capital. The other was Digital Currency Group through Barry Silbert. Now, later around 2017, you had Dan Moorhead and Pantera Capital. But a couple of the companies that I invested in, one of them at Bitcoin Capital was BitPay. And BitPay received one of the outside venture capital funding from Founders Fund, connected to Peter Thiel. And this is around about the time we had lots of the infiltration attempts that I've covered in other episodes. And you can check out my blog posts. I did the Jane Street one around price manipulation. I did the how Bitcoin was created. Was it a CIA op? I did the refute to hijacking Bitcoin around, you can see all these on my blog, Epstein infiltration attempts around developers. All of these you can see on simondixon.com or ask some AI to pull them out for you as well. But in 2017, it was really came down to Barry Silbert from Digital Currency Group, and pretty much every company we invested in, Digital Currency Group also invested in, and Blockchain Capital was there as well. But I remember Barry Silbert trying to pull together all of the largest Bitcoin companies towards the end of this in what became the New York Agreement. And the New York Agreement was a public letter signed by the largest companies in Bitcoin that wanted to do SegWit 2x. Now, most of the corporate side of Bitcoin was on the side of big blocks. And the fringe movement was the community that wanted to, go have segregated witness so that we could then get Lightning Network and layer 2 scaling. The old school part of the community were really centered around bigger blocks, and the community split in two around, how to scale on layer 2 and keep smaller blocks or keep the blocks as they were, but optimize to get more data in, versus those that wanted bigger blocks. And the bigger block community kind of went in their own direction. And the rest remained around Bitcoin. But there was this, at that time in 2017, Blockstream was one of the key players at the center of the controversy. And so Barry Silbert from Digital Currency Group was the one that was trying to centralize many of the venture capital funded companies. Now, at Bank to the Future and at Bitcoin Capital, we didn't sign and we didn't participate. In fact, we took the sides of the users in the user activator soft fork. And for those of you that were around then, I would very publicly go on Tone Vase's YouTube channel, and we would all talk about it. And I remember when the hard fork, actually the segregated witness, activated on Bitcoin, I was presenting publicly in Shanghai on the stage while it actually happened. And I released some videos at the time. But I remember when we were leading up to it, I actually sold some of my Bitcoin Cash because I had some on the Kraken exchange, and they delivered some Bitcoin Cash, and I got to sell it live on the Tone Vase show. Now, obviously, I don't keep all my Bitcoin on an exchange. That would be suicidal. But the ones that I had on the exchange to experiment with that, I was selling live as well. But anyway, the largest Bitcoin companies, they got together and they signed the New York Agreement. And this was a bunch of VC-backed companies and the Bitcoin ecosystem that wanted to do SegWit plus 2x. Now, what that meant is increase the block size by 2, which would require the hard fork, and SegWit, which is the soft fork. And then we had this battle around Bitcoin Cash that came around. Now, prior to that, I was living in Hong Kong at the time, and I was at the Hong Kong Agreement, which was a meeting between the most infamous Bitcoin miners in China and the developers that were in mainly America, Europe, Canada, the most influential ones. It was an agreement to implement SegWit and then increase the block size. But there was a bit of a dispute there because it didn't happen. And that dispute was around the core developers said, well, we don't control it. If we can get consensus, we can get consensus. And so that upset a lot of the Chinese miners. And one of the most important people in the ecosystem was Jihan Wu, who was the largest manufacturing company in China for ASICs. And around about this time, we had Craig Wright being claimed to be, Satoshi by Gavin Andreessen. Brock Pierce tried to persuade me at a conference for hours that Dr. Craig Wright was Satoshi Nakamoto. And Sequoia Capital invested in Bitmain. And so you can really follow the money and see the timing of these infiltration attempts. And I've been following them over the years from an inside perspective, things that people don't know. And this is why I'm trying to document this. And I think it requires probably a dedicated Bitcoin book to do it, as well as just the current book that I'm writing. But Barry Silbert and Digital Currency Group represented the community that tried to F with, the average Bitcoiner, the average user. And the resistance against that, developed by Gregory Maxwell and Luke Dash Jr., was the user-activated soft fork. And so we were able to resist against the miners with the threat of nodes. And this really sets up the important part of the ecosystem. You have the users that are running nodes. And if you're not running a node, then you're not one of those people that has a say in the ecosystem, which means you have to be self-custody. Then you have the open source developer community, and then you have the miners, and this kind of fringes off into corporate Bitcoin, all the companies that try and produce services around it. And so really those corporate Bitcoin are often node users or miners, or maybe they're a part of the, you know, the mining ecosystem, or maybe they're even trying to fund developers. BitPay, one of the companies we invested in, that Founders Fund later invested in with Peter Thiel, they were originally funding Bitcoin until the Bitcoin Foundation came along. And then Brock Pierce came along and, you know, created Tether that was then sold to Bitfinex. And we had these infiltration attempts in the Bitcoin Foundation that was then bankrupted, but that was more decentralized funding. When it was bankrupted, the development, or a part of the development, went over to MIT in the digital innovation lab. That's when you had different infiltration attempts from Gary Gensler, who went on to become the head of the SEC. And so there's a long story of these different types of infiltrations, but Bitcoin always remaining because of that decentralized setup of miners, developers, and nodes as the key parts of the ecosystem. And then corporate Bitcoin would try and fit in and infiltrate parts of the developers, or infiltrate parts of the miners, or infiltrate parts of the nodes and become an economic node, a more important node, because it's verifying more transactions, as it were. But in 2026, we had an announcement this week, and these are not necessarily related. But I don't take anyone at face value. I look at incentives and I follow the money. I don't decide you're a good actor, you're a bad actor. I just look at the structural incentives, follow the money, and structurally, you know, what kind of agenda are you pushed down? Well, this week in 2026, we had our Barry Silbert digital currency group moment, but this time it was with Michael Saylor and Strategy. And Strategy have now announced, under a different initiative, mainly focused around quantum computing and security, that many of the largest, but this time not just Bitcoin companies, but financial industrial complex, fixed nodes, are actually putting together a $15 million security budget in order to support Bitcoin security initiatives and fund developers that want to work on those initiatives. Now, again, this is probably focused around quantum computing. But when I look at the people that are involved in this consortium, it looks like a heavyweight version of the New York Agreement 2.0. And we saw Elon Musk try to do this, if you remember, around trying to make Bitcoin more eco-friendly or more ESG. And he put together his little consortium of miners. We have seen this before. So now we've got Elon, Barry Silbert Digital Currency Group, and now we got another attempt at it with Michael Saylor and Strategy. So who are the people that are involved in this group? Well, we got the big guns. We got BlackRock, we got Fidelity, we got Coinbase, who's now public. We got Galaxy, who's now a public company. We got Anchorage, who's a bank. We got ARK, we got Block, and even Blockstream. So Blockstream was on the other side of the corporate debate in 2017, even though there were, revealed funding via Brock Pierce and Blockchain Capital, and this led to some funding via the Epstein affiliated partners, and Joito, and various things that I've covered in the Epstein side before. But now Blockstream is on the corporate side, the other side of the debate. You know, whereas Blockstream before was on the side of the user activator soft fork. Now, Blockstream was funding Bitcoin developers. And so we had members there, which was Adam Back and Luke Dash Jr. And so now both of those, Luke Dash is no longer a part of Blockstream. He's made, I won't put in the words, I shared this in the blog, But now we've got this factoring and factoring and factoring off of the community. We now got multiple developer funding parts of the ecosystem. And now it's incredibly healthy because we're discussing all of these, we're following the money. It's interesting how, Blockstream, who was completely opposed to the New York agreement, is now part of this consortium. And it makes sense, if this is genuinely dealing with quantum computing. But when a bunch of large financial institutions that all have vested interests in trying to control as much of the Bitcoin ecosystem get together, they do what people do behind closed doors. They coordinate on how to fulfill their interest in order to maximize what they can get out of Bitcoin and the more parts of the ecosystem that they can control. So this is a different initiative, but really the same lessons. And I think you'll find it. That Bitcoin doesn't belong to a consortium of corporates. And we've seen this time and time again, and we'll see this in the future. But you need to be very aware about it. But the only way that you get to participate in that battle is by holding Bitcoin in self-custody and running a node as well. So consensus belongs to the people running nodes. The miners add new blocks, but the nodes decide whether they're going to enforce those rules. And the developers, in service to the community through Bitcoin Improvement Proposal, BIPs, have a process for deciding what is included in order to reach consensus. And we have alternative implementations to that, which is what the NOTS movement pushed forward, which is why I wanted to support NOTS. But it's only the people holding their own keys that are going to be able to build the resistance of this network. Because if everybody holds Bitcoin treasury companies and everybody holds Bitcoin ETFs, then you're handing over your vote to the FIC. And it's up to us in order to maintain the integrity of the network. We only get one shot at this. There's not going to be another Bitcoin. Every attempt that forks off ends up a shitcoin with less security. And so the battle for what is Bitcoin and these soft fork, hard forks, very, very important. So self-custody is Bitcoin's greatest defense. And everybody has a role in participating in that. You either give power to the FIC, Coinbase, BlackRock, an exchange, or you participate in this resistance. So this is the latest attempt, and I'll say what I say at every attempt at this. Nice try, FIC. Nice try, financial industrial complex. But this won't succeed because there will always be a community that are willing to create that resistance and that friction. And so what you've always seen in Bitcoin in this open source boardroom is what looks like chaos and carnage. And there were a lot of people during the block war debate that just said, I'm out. I don't know what this is. And that created an opportunity for dollar cost averagers to buy cheaper and cheaper Bitcoin if you're owning more Bitcoin every single month. But for some people, it's a lot. And so I wanted to record this to let you know that this is a part of, this sovereign asset that is Bitcoin, to try and remain sovereign and not be captured. And there are plenty of people that want to capture and plenty of covert operations. And so I'm going to share in the blog, and it's going to be a long blog because it's almost like written if I were to write a chapter on this chapter. But I wanted to include it for you. So in this blog, I'm going to share what I cover. And I'm going to reveal to you right now, there is a point where I stand with BIP-110. And there is a point at which I don't. And I want you to understand that if you're going to participate in this. So right now, I'm running a node, and it is NOTS, and I will be supporting BIP-110. And I'll share on that blog exactly why. And you can't get a simple answer. So firstly, in this blog, I want to define what BIP-110 is the spam war, and how to see through some of the propaganda, because there's loaded language that kind of tries to direct you in a certain direction. And that's on both sides. And so I title this The Battle That Nobody Wants to Name. And the reason I call it The Battle That Nobody Wants to Name is because if you're a long-term listener, you'll be very familiar with Operation Gladio. You can look it up on AI, or you can read a book like Paul Williams' Operation Gladio. But it shares the intelligence operations desire to fund war, both sides, because the war is the strategy. It's strategic tension. Strategic tension, and then monetizing what comes after the war. And I think that's the strategy in 2017. And I think that's the strategy in 2026. And one of the important things about strategic tension and covert operations is most people don't know who they work for. They don't know who they work for because they may be funded via a company, an alternative structure, a sponsorship, just buying into a narrative. But there are layers of that that leads to these different types of operations. So anyway, I wanted to clear and clarify that blog. There'll be a link below on where I stand. And it's a long article, and here's exactly what I'm going to be covering. So where I stand on BIP-110, I've already given you spoiler alert, but I want to make sure you understand the frame. It's a strategy of tension and strategic tension, and that's what we need to really be aware of. So if you allow this to get you so tribal that we end up destroying each other and going for the worst strategy based upon what seems rational if you get too radicalized into one start or one side, that you end up going all in. And I saw this in 2017 and all the attempts prior. You always get this radicalization of the community that then starts to become counterproductive. At the same time, it's okay. It exists. We'll be fine. Bitcoin will be fine. But I've seen this movie before. And so I wanted to share with you that movie. So what BIP-110 actually is, technically, and it becomes a technical conversation, but also philosophically. And I am philosophically aligned, but just because I'm philosophically aligned, it doesn't mean that I can't see the nuance in the technicality. And I had the time to go through that. And I welcome other thoughts, and I welcome comments in here, because I don't want to get radicalized into one way. But I do exactly what I always do, which is follow the money in order to map the incentives on all sides. And there are question marks on every side of this chain. Pardon the pun. And by design. And so I look at treasury companies and really this rush to the resolutions of the treasury companies. I look at Cantor Fitzgerald, their role, Tether, BlackRock, and BlackRock's desire to tokenize everything based upon companies that I actually invested in, like Securitize, and the broker that we created that was sold to Coinbase, which Coinbase is now a FIC node, and working with Larry Fink in terms of these tokenized securities. But I think it's interesting that everything is happening in the same week. And that's this week. So that's why I wanted to make sure I gave that update. And so we had the Bitcoin Security Consortium. We also had Clarity Act reaching a resolution. Trump setting up how he wants to deal with the ethics clause around his scamming that potentially he can, utilize during his term, but expires once he leaves. Jack Mallers leaving 21 Capital. And all of these things right up until we're actually getting, the activation of this soft fork and BIP-110. And so I want you to understand what an economic node is and where that actually comes into the battle. I want you to understand the game theory, and that there is actually, just like wars when we battle them out in the geopolitical section, an escalation ladder that we need to be aware of. And at what point do I come off that escalation ladder? Right now, my position is that I have a stop point on that escalation ladder. But until then, I'm on board with nodes knots, and self-custody, and BIP-110 for a very specific reason, because I believe if this attack vector exists, and this we need to understand how this rolls out, and there are several different parts to it compared to the 2017 one. And it wasn't until we actually did it, until we had the user activated soft fork, until we had the replay protection, until we had the launching of Bitcoin Cash and Bitcoin on the futures markets, until we actually had the fork off and then the break off of Bitcoin Cash to Bitcoin SV, that some of these things make sense. So I'm not going to pretend to know. I've got my experience, but there are several unique parts of that that I think we need to go through, and we need to go through it now. And we need to see what we can achieve as a community with nodes versus what the miners do and what the corporate Bitcoin does, of which I admit, over the years, I became a shareholder in many of those companies. I think you can look at my track record for how I've, acted, but follow the money on me. Do the same exercise yourself. I've been selling off many of my Bitcoin company positions as they go public and as they go liquid. But, I'm down from about 100 companies to under 50 companies now. But anyway, I want to share exactly what I'm doing with my nodes, how far I'll go, and why I want Bitcoin to go through this mechanism in order to make it stronger. And that's why I support BIP-110 in order to try and make it stronger. But I also want to make sure people understand the low time preference strategies, the game theory, the escalation cycle. And I want everyone to have the long-term game and the short-term game. And so that's what I cover in my blog anyway. And so because I was in writing mode, it's a long blog, but I wanted it to be thorough and make sure that you have it. And so that's everything that I'm going to be covering on the battle for Bitcoin part 1 and the battle that no one wants to name, i.e. the strategic tension and Operation Gladio applied to Bitcoin. And I want to make sure that you're not radicalized into doing something counterproductive and having a high time preference, short-term strategy. I want low time preference, long-term thinking here. And if this for the next year has a really big impact on price or anything, making sure you got your strategy and you don't get confused, because the people that got crowded out during the last block war missed out on some of the highest performing returns and the best place to be as a result of that. And so that's what I wanted to share. And now let's move over to at least part 2. And in part 2, we stress test some of these assumptions. Now, this interview was from, it wasn't as recent as me publishing this blog. So it was before I started writing the book. And then I took on the first week time out to do this interview. So we're going to play that interview, but we cover from, the New Era Finance blog, the New Era Finance YouTube channel, some of these things. So just before we go to that in part 2, and how he believes that the New World Order and the battle for trying to control Bitcoin and the interview that we and the points we discussed, I want to make sure you've got all the resources. So I am on now chapter 18 of my 21 chapters for the book that I've been trying to write. You can check out the last 2 episodes of Simon Dixon Hard Talk if you're interested in finding out a little bit more about it. But it's going to go out to those that are free members of Simon Dixon membership portals. So make sure you've signed up. Go to simondixon.com and you register there, and I can send you newsletters as I progress. I tend to send a maximum of 2 emails a week to keep everyone up to date. Nothing to sell, no sponsorship, no company upsell, no anything there. And we're going to open source part of the books on simondixon.com as well. So if you want to be a part of that, then make sure you got a login on there. And I've been reading your different comments on YouTube and within the membership portal. And my team goes through all the ones in the membership portal to suggest things that they'd like in the book. And so if you continue doing that, then give me that feedback, because it's actually shaping the book as I write it. And I think I'm going to be done with the first drafts of the 21 chapters by next week. And then I'll be cross-referencing it across what's listed in that membership portal. And do me a favor, put a little comment below as well if you're going to put one over there, just to help the algorithms and get people more available to this. So that is my position. And what I'd like for you to do as well is make sure you got that Simon Dixon Hard Talk Live login, and you'll be on my newsletter. But also make sure that you've subscribed on YouTube, hit the bell symbol, hit all, so you get notifications here when I go live. Follow me on Rumble in case I get taken down here. We'll be streaming on Rumble. And also on X, at Simon Dixon Twit, where I give real-time updates. They've been a little bit light recently because I'm in book writing lockdown mode. And also my podcast on Apple and Spotify, and also published on simondixon.com. And so if you'd like to be a part of the newsletter, if you'd like to get that login, if you'd like to give feedback and be a part of publishing the book and the open source project as we get this out, then I'd love for you to join me. So always remember, you are alive at one of the most interesting and exciting times in financial history. Some are going to get wrecked, others are going to do really well. I want you to be on the right side of this change. And hopefully we can do it with some more peace, love, and unity. And we recognize the divide and conquer Operation Gladio. I hope you enjoy the part 2 interview on this episode's of Simon Dixon Hard Talk Live. Peace.